Welcome to Under the Radar Report. It's been a huge year, fiscal year, and we're really excited here because we're talking about small cap royalty. This time last year, we picked 8 stocks in our small cap royalty portfolio, and they've shot the lights out. They've performed better than 30% versus the All Ordinary's 8%. So it's been a really big windfall. And what these stocks are, they're basically all, perennials, if you will. Stocks that can perform, that are strong enough to perform in any conditions. And we have a number of criteria for them, well, 10 in fact. But basically, a big part of that criteria, what we spend a lot of our time on, is the customer base. But the bulk of our portfolio, the bulk of our performance, and actually, in terms of numbers, comes from our strength. One of our strengths, which is mining. And with that, I welcome Peter Chilton, our mining analyst.
Morning, Richard.
So well done on
Thank you.
a big fiscal 2023. So first of all, Peter, Allkem.
Well, Allkem is a product, it's a lithium company.
And that's delivered 50% return.
Yeah, pretty good.
Yeah, pretty
And
good.
Allkem is a product of the merger between Orocobre and Galaxy, and that's created a massive pipeline of new projects, diversification between Australia and South America. So it's a pretty good company in that respect. I think the thing that's been working for Allkem, or one of them, is the fact that it's actually a producer. It's not a company that's got projects for its own sake. It's actually got production as we stand now, and it's got the tailwind of lithium prices, which have been pretty strong based on a very good growth outlook, probably 10 years of growth outlook, as we get the energy transition towards lithium for batteries for electric vehicles and battery storage and so forth. So it's very well placed to benefit from that tight supply and continual high prices, which could continue for many years to come.
Yeah, and they've done another merger, haven't they?
Well, they've just announced another merger with a US company called Livent, which is a very good fit between the characteristics of the company. Livent's very strong on downstream processing, so that adds a lot of value to the company.
So part of the criteria for royalty is price. So we'll run the ruler over and we're going to come up with our next royalty stocks in the coming issue. But the next one to talk about is one that we've covered for a long time, and that's Austal. Now this company is great for a kind of cyclical exposure because it's got probably the gold-plated of all gold-plated customers in the US Defense Department or the US Navy. So we're going to run the ruler over it and see just to what degree the recent $5 billion contract is priced into the stock. The next one I'd like to talk about, which is also covered by another analyst, is Data3, DTL. That one's performed like 60% over the 12 months. This has basically been a reselling business, in IT services, and it's transforming itself. It's consistently transforming itself, most recently into cybersecurity and the cloud. So what we like about this company is its blue chip customer base, but the fact that its management's very quick-footed. Another one that this analyst covers is New Zealand media, and it's typically got a dividend yield of close to 10%. I mean, that's pretty impressive. It is cyclical, but it's able to do that because it's got a monopoly position in its market. The next one is also an underperformer in the royalty portfolio. New Zealand media is down a bit. Is OFX. Now OFX is a forex company. They're basically, I guess they've gone from being retail focused, and they're transitioning towards being wholesale focused. Now that when you invest in turnarounds, which is a big factor that we look for it under the radar report, sometimes your timing can be a little off. And with OFX, we were certainly disappointed with the recent results and downgrades because it indicated that their retail focus was still strongest in the company. But we've seen that stock rebounding quite significantly, so there is hope. but whether or not it's royalty remains to be seen. So we're going to look at that one again. Now we come to the mining sector once again, but it's a hybrid kind of mining services, kind of industrial services company in Southern Cross Electrical, which is increased or returned 20+% over the 12 months.
Yeah, Southern Electrical, it's a very interesting company. I guess it started off primarily in resources, but it's now diversified into sort of all sorts of commercial areas, including electrical for supermarkets, maintaining air conditioning and so forth. And also, a very big part now is infrastructure. So it's diversified. And as the company has expanded and diversified, it's also been increasing or improving the quality of its earnings by increasing the amount of recurring earnings. So it's less individual short-term contracts. A lot of it's now ongoing, committed business. And the other thing about the company is that instead of being just a normal electrical contractor, it's gone sort of upmarket in the sense that it's now doing instrumentation and a lot of high-end electrical jobs, which a lot of its competitors couldn't do.
Well,
so it's forming a niche for itself.
It's very important in small cap world is a niche, isn't it? To give you that pricing power.
Exactly. So we like, it's got a good growth profile because of that diversification that it's got.
And from here we move to the gold sector. And the gold sector, we put them in the small cap royalty because it was a good hedge. Because as we know, in times of uncertainty, gold outperforms, and we saw that this period more than most periods, and it was juxtaposed by the underperformance of the cryptocurrencies, interestingly. But gold's value as a safety trade remains intact, wouldn't you say, Peter?
Yes, I would. I mean, I think one thing that helps gold is the fact that generally speaking, the cost of producing it goes up year by year. So it's got an inflation effect on the cost. And that helps keep the price going up. I mean, it's consistently over many years, gold prices continue to gradually increase. I think as part of a portfolio, if you can have a gold portfolio, having a gold company that in itself is a well-run company with growth, it's a very good ingredient for
because it gives you more leverage.
Yeah, so get very good leverage. You've got the gold price, and you've got, say, production increases, good management, cost reductions, maybe mergers and acquisitions, or to produce a very good sort of package for investment.
And before we get to the superstar Northern Star, I mean, not to say the word star too many times, Evolution Mining has impressed, returning close to 50% over the period.
Well, the good thing about Evolution over the years is it's gradually been improving or adjusting its portfolio of operations. So some operations come towards the end of their lives or they mature, it's very happy to sell those assets and then judiciously buy other assets. And it's done by doing that, it's done really well in just continually improving the quality of its portfolio.
And how many assets do they have now?
Currently they've got 4 major operations plus another one. So 4.
Yeah, so they're well diversified.
Yeah, well diversified. Unlike a lot of gold mining companies, they tend to have a very high return on capital.
Quality.
And good quality, a good growth profile. It's just a very attractive company.
And speaking of, attractive companies and high quality gold miners, we get to Northern Star.
Well, Northern Star is in a similar category to Evolution. Actually, Northern Star is slightly bigger. It's got a higher production, higher gold production. But that again is made a lot of acquisitions, rationalised some of its assets. A lot of its assets are in the Kalgoorlie area, which is a global, renowned gold location. So there you've got growth going from
Kalgoorlie super pit.
Yeah, exactly. 1.6 million ounces at the moment, but rising to 2 million ounces within the next, say, 3 years. So good cost structure, good, well managed.
Both these companies are standouts with their management,
both are standouts with management and the potential for them to sort of surprise by doing another deal or some other initiative.
Yep.
Which is attractive for investors.
Definitely. Well, we're looking forward to the small cap royalty stocks that appear in our next edition of Under the Radar report. Thank you, Peter.
Thank you, Richard.
And it's been a big financial year, and I'll look forward to talking to you soon.
Thank you.
Okay, goodbye.
Bye.